price action. Ethereum is very interesting because just like Bitcoin, it's reacting poorly to the tightening of monetary policy, the reduction in the Fed's balance sheet, the limiting of quantitative easing. And what we're seeing here is Ethereum on the daily chart just tested the 200. You had a small bounce, but now right away the selling pressure has continued and you're basically trading below the 200, just slightly below the 200, which every time we've seen it in the past, here you saw it rip up. Here we traded below, ripped up, then came back down to test it on a double bottom and then ripped back up. I trusted this more so here because, again, you had loose monetary policy, so much stimulus being pumped into the system, and here there's a different point where the money is starting to be cut off. That being said, if the policy was to pivot and they were to loosen it again, this goes flying back up again. So it's all relative to economic policy and what the current macroeconomic landscape is telling us. So the technicals react accordingly, and they generally react first, and the patterns are ultra bearish. If you look on the weekly chart of Ethereum, I've got some key levels here, the 50, the 618, the 786. If you go back to a previous crash here, Ethereum reacted exceptionally well to the Fibonacci retrace levels. And often you had major bounces that you could trade off of these levels every single time. Now you have to be very careful because these bounces are not sustained. When you're in a downtrend, catching the falling knife is very difficult and very skilled and is not recommended, but it is possible. That being said, the 50-day moving average on the weekly chart is here. You still have basically a long way to come down here, and you will test that maybe for a small bounce, but ultimately I do think you come down to this 50%, and then the 618 will be a very strong level. I have a downside price target all the way. I do think Ethereum has a strong chance of wiping out this whole bubble. That would be pretty insane if it came down to the 290 level, the previous COVID high before this COVID crash. And that would pretty much negate this whole move up in free monetary policy. And it would actually statistically match the exact same correction as we had in 2018 during the last period of economic policy tightening when Jerome Powell was raising rates. Ethereum had a 94% correction, bounced off of its fib levels. As Jerome Powell tightens policy again and raises rates, if Ethereum was to have the exact same 94% correction, it would take you down to this around this 250, 300 level. And that would be an exceptional opportunity to buy. Let's take a look at some blue chip cap stocks. Microsoft, still extremely overbought in my opinion over the long term. Short term, you're a little oversold because you've had a few days here. You've had a 1, 2, 3, 4, 5, 6 day running time count of downside pressure. And one could argue this is almost like a three-tail theory where you've had a smaller tail, a bigger tail, and a bigger tail, and you were likely to have the bounce. Now, the beautiful thing that I'm witnessing here is this bounce is pretty weak. I mean, intraday we did trade this on the day trade room, but you had a small bounce. You rallied all the way back up here. You didn't even recapture 50% of this previous downside candle, which is a very bearish sign. And generally speaking, we do recapture a lot of these. Like for instance, when you had this sell-off here, the next following candle recaptured a decent amount because it rallied. Let me just take this off here. Because it rallied actually all the way pretty much up here, and you recaptured 50% or more of the candle, and then you had a gap up. Now, we could gap up tomorrow. I don't think so. But that being said, we did fill a major support level here. This gap fill here was just filled. And you are kind of in the middle of no man's land right now. You're trading between the 50, which you've broken to the downside, but you're still above the 200. Next resistance point is you're going to have these pivot highs here. We could definitely see a move into this region here. But ultimately, where do I think this price action is going? Well, let's go on a little bit of a longer time frame, the weekly. The weekly time frame, as this moves up, I do think you more or less come into this zone, and then you could even come lower. But the thing about Microsoft is you're currently, your PE has come in a bit since you've had these little sell pressure days, but I still think you're overbought in the long term. And essentially the PE is trading at around 35 or so, still really, really high in comparison to the size of the company. The company is pushing 3 trillion, just like Apple. Now it's actually off of those highs, but it's closer to 3 trillion than it is to 2 trillion, and that's saying something. So when you have that size of a market cap and you have a PE of over 35, it's very difficult to sustain those when there's less liquidity in the system during a period of which we're about to go through. And I naturally expect Microsoft to still come down. You're going to see bounces along the way because, of course, it's the tech darling, blue chip, safe stock, one of the biggest companies in the world next to Apple. And people are always going to buy the dip, but it will come down in PE. Okay, just understand that. And just like Nvidia is another one that people love. And I'm actually just looking at the financials here. And Nvidia, it is still trading at a PE, a price to earnings ratio of 84.14. That is incredible. That is just downright insane. Now, as a company, they're still generally safe because they've got a free cash flow of about 7.6 billion, and that's not the biggest cash flow, but it's still relatively healthy for the expenditures and what they're forecasting over the next few years. That being said, their PE needs to come down significantly. I don't care how much of a demand there is for semiconductors. During a time of economic policy, you do not want to be in high PE stocks. It is a recipe for disaster, and you're asking for trouble. With an 84 PE in Nvidia, let's just look at the last period of interest rate tightening, which was 2018 and 2019. And essentially, at the peak in 2018, what we saw was the stock market correct in a pretty big way. So let's take a look at what Nvidia's PE, price to earnings ratio, was in the year 2018. It was roughly 24.16, and in 2019 it was 55. So let's take between those 2 years, when interest rates stopped tightening in 2018 and the markets pretty much bottomed out in late 2018, early 2019, Nvidia's PE jumped, and then it jumped again, and it jumped again. But let's take the median. Let's just say, so during the economic policy tighten, Nvidia's PE dropped to 24. Right now it's 85. That would almost mean it has to drop just over 3x, or it'd have to be cut by just over three times for it to fulfill the 2018 PE. Now, it has grown, the company's a lot bigger, there's still more demand than there was for semiconductors. But let's just take the median between 2018 and 2019. That would roughly be between 24 PE and 55 PE. The middle, the median is roughly, let's just say 40. Yeah, 15 each. So 40. Even if the PE was to drop to 40, that still has to be cut in half, which is pretty incredible. So I do think tech has major downside, major downside. So that's why I want to show you the SOXX. Whoops, excuse me guys. Let's just show you the SOXX here, the SOXX, which is the semiconductors, since we're talking about Nvidia. The semiconductors on the daily chart have some interesting levels. Essentially, we've been trading in this range now for quite a while, back in February of 2020, so the COVID lows, and then you had a high in February of 2021, so basically a year apart. And now you're back up here, and you've been trading in this range for a long time, 22 months essentially. You've been checked by these upsloping trend lines, and right now you're pretty much in the center of the range, but you're still in a very extreme overbought. You're pretty much at the highs that at the SOXX ETF has ever been at. And what's interesting now is you're starting to see every time you've made new highs here, it's getting weaker. You're making new highs, but you're not going to the top of this trend line like you were. the highs are stalling out. So here you made a new pivot high, sold off, came up, missed it, sold off, came up, made a new pivot high, but just barely. That wasn't convincing. Sold off substantially to the 50, had a bounce, made a new pivot high. Not convincingly compared to that one, and certainly not near the closer to the trend line. In fact, every single high you've made, you're getting farther away from the trend line, which shows the power of the trend is changing to the downside. It's getting weaker, people. It's getting weaker. And let's just look at this now. Now you could argue you have a double top. And again, this distance to here is closer. This distance here is farther away. This distance here is farther away. This distance here is farther away. So the trend is slowly rolling over. And key levels quickly I see here, gap fill here, and you will likely test this triple bottom zone for a quick bounce. I don't think it's going to sustain. You do have another gap fill down here on the charts, and I do think you come down to that level, but ultimately you should test the lower end of this range. This upsloping trend line just so happens to have the 200-day moving up average coming up. So I think you test those range with a couple bounces in between, or intraday trades opportunities. If you're looking for more of a swing trade and you're not going to be more active, I would just wait for pretty much the bounce off the 200 or this trend line. But ultimately, as tech sells off, as semiconductors sell off, as rates tighten, as policy tightens, as less liquidity in the system, I do think you come substantially down, and these fib levels are going to be some key zones. Basically the 382, once you break this 50-day, will be a pretty strong zone, but you should see some significant downside, and we'll reassess as the price action goes. Let's take a look at oil. The USO is an interesting chart. Oil right now is basically heading into some major resistance. So we've actually started a short on SCO. We're shorting the USO, which SCO is 2 times inverse ETF to the USO. So you get a little more bang for your buck, which means you got to be a little more precise with your positions and management and size. That being said, USO has had a significant move to the upside here. You had a bull flag consolidation, which broke out. So there could be some more upside. You could come and test this pivot high here, or this gap window up here, since you also have broken out of this downsloping trend line. But you are facing some resistance, as you can see some sell pressure on this, basically this this candlestick over here. And you could likely come test the scene of the crime where you broke out this trend line and then have a bounce all the way back up. But interesting price news and production in Kazakhstan. The Kazakhstan government has pretty much collapsed. That being said, there's a lot of oil and energy products like uranium also being produced there. So with the people on strike, no government, and basically the country's in disarray, that definitely has an impact on supply. But it should be worked out pretty quickly. And basically there will be a couple key levels that you could short. You could short at this gap window, and you could short at this pivot high. And basically I do expect oil to come down in price. Let's take a look at the spiders. The spiders is a cool chart as well. So tracking here, what we saw in September was the 23-day sell-off happened here, and then you had a big rise being kept in by this trend line. You basically never ever broke out of the trend line. Pivot high, pivot high, pivot high, kissed it, pivot high, kissed it. And now you're come up here, and the similar trend to the SOXX, where you're getting, basically you're making a new high, but now you're getting farther away from the trend line. It shows that the force, the momentum, the money in the market is basically dwindling, and the effects are becoming noticeable just via technical analysis in the way the patterns are playing out. And again, you've been in check by this lower sloping trend line. But basically what's critical about this price action is you've had a 23-day sell-off, a rally, then a 35-day sell-off, and then you had this W, kind of like a double bottom. But again, you didn't really make a significant high above the previous one, and you've now sold off again, and you're testing this 50-day. I do think we break this 50-day, and we ultimately head down to this gap fill or this lower sloping trend line. You'll also have the 200-day coming up to support it. But on a weekly basis, there's some major key levels on the spiders. I do suspect the spiders to come in significantly, as it's been in a raging bull market. And where are some of those levels? Well, if you just look at some of these levels, you'll have some major support zones, basically at these pivot lows here, these two pivot lows. There's a gap fill in the chart here, and one could argue that 383 is a nice level for myself. Again, these price levels can change drastically based off of the selling pressure and the bounces and how much something sells off and how much it bounces. So it's all relative to also the current price action. But I do think you're heading lower, substantially lower. I think that's it for tonight. I hope everyone is wary of the brittle markets out there. Things are looking very shaky. Price levels are at critical inflection points for crypto, Bitcoin. You want to be protecting capital right now. A crash, a flash crash can happen in the blink of an eye, and you got to be, it's all about one thing about making profits, but you can lose them so much faster. And that's why I love day trading, because you are not susceptible to the overnight downturns that often happen. And people got to realize that when there's policy tightening periods, things get serious. People forget the pains that we experience during these economic policy changes, because we've had things for so good for 22 months. 22 months is not although it's a long trend and a lot of damage can be done, that 22 months in a downturn can be erased so much quicker, double, triple, quadruple the speed. We could have a bear market over 1 quarter, and it would cleanse these PE stocks. That would be pretty harsh, and I'm not saying it's going to happen, but it could, especially in the crypto markets.